Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today we have back CEO Hylton Karon from iFabric. iFabric trades on the TSX exchange, or the Toronto Stock Exchange, under the symbol IFA, and it also trades on the OTC under IFABF. The company is currently trading at $1.49 with about 30 million shares outstanding, or about a $45 million market cap. I'd now like to hand it over to Paul Andriola.
Great. Thanks, Trevor. Hylton, great to have you back. It's been a little while since we last spoke, but we always we enjoy getting you back here to get the latest and greatest what's going on. And clearly you guys have been busy over the last several months since we last spoke. Lots to talk about. Financials are looking good. You've got some updates in terms of some patents and some other things that we can talk about. But before I get into the updates, we've got some new people here. Maybe you can just remind us what iFabric is all about, and then we'll jump into some questions.
Okay, thanks, gents, for having me. Gents, ladies, everybody, thank you for taking the time to hear our story. iFabric Corp is basically two solely owned 100% divisions. One is a chemical company that supplies both chemical treated fabrics and finished apparel to both the medical and the retail market. And then we have an older and smaller, mature ladies' lingerie division, which is been a fairly steady, high-margin business that contributes towards the bottom line. It's really not what the market has focused on, and I think most of my presentation today is going to be on what we call our Intelligent Fabrics division. This is a division that has both patents, technologies. We're working on, we just did a report on our clinical trial and our environmental or US EPA submissions. And in fact, one certification that we just announced recently that we achieved, and there's others that are in the pipeline. So we work with not only the medical apparel suppliers, but we have, I would say, the higher profile athletic and athleisure companies in North America that use our technologies in their products. As Paul alluded to, from a financial point of view, our balance sheet has been a rather solid one. We haven't touched our line of credit, which we actually this year just doubled at the bank. Our facility doubled, yet we still haven't dropped into it. So we're still on the cash positive side of operating the business. And our debt to equity ratio is a pretty impressive one. And our ramp up of the future of what we're doing, I think, where a lot of our sales are to the retail segment. And if anybody follows the retail segment segment has been rather soft lately, yet our business has grown. We're bringing out our next quarter's results next week. When one looks at the 9-month numbers, these are numbers we've never had before, and still pale in terms of the growth that we know is coming in 2024 and beyond. So we're a company that's on the growth. I think that COVID just slowed down our growth trajectory. We're now back on course of what we were going to do 2018, 2019, and I'm hoping in the next 2 to 3 years to double where we are today in terms of revenue.
Fantastic. Let's talk about that. I mean, Q2, I think that was the last quarter you reported. Yeah, it is. 91% revenue growth. What happened to get that kind of growth? That's
so those impressive. Were based on primarily licenses, new licenses, and the biggest one being Roots, where that also opened the door for us to sell to Costco. And that's absolutely, ladies and gentlemen, just so that everybody understands the model of our business, Paul, we have to get orders 6 to 9 months before we, can ship to a customer. So we knew these programs last year landed us new accounts and new programs, and in the millions of dollars. So this was and where our business has been seasonable in the spring and the fall and over the winter. December, January, February have traditionally been our soft months. And then in the middle of the year, April, May, June is also a softer period. We were looking for areas of business with our manufacturing and technology know-how to fill in the peaks and valleys and try and make this more of a year-round operation with the staff here and all the talent that we have in the two divisions. So that's where the big bump came, is in new programs that we manufactured last year and shipped to Costco and other retailers, but Costco being the biggest one. And going forward, they have indicated those were really test orders to test our ability to deliver on time, the right quality and the right merchandise, because we not only is it our technologies, but we design the products in-house, manufacture it, and give them a finished product. And so the sell-through was fantastic for them, and the repeat, based on what we've heard, is going to be multiples of what we did last year, which really is part of why I'm so bullish for 2024.
Now, before we went live here, you'd mentioned that you guys have very good visibility. Like, you guys do get a good idea of what sort of next year looks like based on those orders you just talked about. Maybe explain that a little bit more. Is it 9 months out? Is it 6 months out, 3 months out? How far can you see out there?
Yeah, there's nothing we can do in terms of manufacturing apparel. Even if our customers are manufacturing the apparel, when you start with the textile process of making product from a dye house to then go to cut and sew, package, finish, and freight it from Asia, where most of the world's products are made, in 3 months. It's almost, dare I say, impossible. It's tight doing it in 6 months. So really, anytime we bring on board something new, at very minimum, you're looking at 7 to 9 months is what we would consider a tight window. I don't know with Vancouver, if you know what's going on with shipping. So we have to take so many different variables into account to bring goods in on a seasonal basis and ensure that the goods are in the warehouse, taking all kinds of delays in the world into account to make sure that we've got goods in time. So we really have to work, I would say, close to a year out. Gives us a high level of comfort that we're going to deliver the product to the customer.
Now, you've got some exciting sort of projects that are underway right now, your Protex, and some of the key innovations that you have. Maybe let's talk about some of them, some of the progress you've made here over the course of the last 6 to 12 months.
Okay. I would say the thing that we released just a few weeks ago, we'd been working on a clinical trial, and the clinical trial was done in a hospital in California. They're part of a 700 unit hospital chain. And this clinical trial was meant to be finished October, November, December. And as you and Trevor know me for a long time, I'm so resistant to put when is something going to be completed, because it literally got completed 2 weeks ago. It's like everything that one does with the medical industry. It just takes longer than you would hope for. But we were so confident that their technology had shown so much good performance in the laboratory testing that we've done for multiple years, that it was important for us and our customers to see that in a real world setting, what this offers the medical community. I can tell you that we've been invited back in 2 weeks' time to the hospital chain that actually conducted the study, because now they want supply of their scrubs and their lab coats and their apparel in their hospital chain to incorporate our technology, because they've seen what it does in their own hospital. So who better to sell to than the people that did the study? And the fact that they're so impressed with the results and are so anxious to have that much more of a tool in the infection control kit to help protect their, the staff that work in the hospital. At the same time, we're going to be going after nursing unions and the medical community at large to now that we've got this clinical trial, to start really rolling it out to the medical supply chain, which is really why we went after the business. We did the low-hanging fruit, which is the sportswear trades, because they needed a much lower certification than a medical certification. I think at the same time, we are taking the data from this clinical trial and sending it out to medical journals. And I'm hoping that sometime in 24, we'll have what's called a white paper that we will make public, which will even give more credibility to what this technology is able to offer to the medical community, which will only enhance sales further. So we really are pleased that the results we got were so impressive, and hopefully with independent journal reviews, they concur with what we achieved.
Mm-hmm.
We were able to achieve an EPA claim on a technology. I know that a lot of people have asked us for many years, you talk about it, and dare I say a number of old IPO investors said, you're a Canadian company, you'll never get an EPA, and you always say you're going to get it and never get it. Well, the fact of the matter is we did get it. Now, while we still have our other next level EPA submission in with them, we will continue to work with EPA. It proves that we did get a certification of another technology that was easier to put through their process. But the fact is, EPA do work with us, and as long as you check the boxes, you get the registrations. These medical technologies are actually global in nature. So it's all very well. We haven't actually focused on Health Canada. We really did focus our efforts due to expense and also market size with the US EPA as the initial foray. I cannot believe anybody in the medical community globally doesn't have some exposure to who EPA are, and that's going to carry some serious weight globally. Mm-hmm. So this is really not just a North America approach at the end of the day, but really a global play. I can tell you people in South Korea have already contacted us now that we've got more to show them. So really, we look at this as expanding on a global level in terms of where this, where we can get opportunities of licensing or supplying chemical or finished product on a global basis.
Mm-hmm. So are you at the point where you can commercialize it right now? Are you starting
Absolutely.
to sell product?
Absolutely.
Okay.
Yeah.
Fantastic. And maybe explain a little bit what the business model looks like. I mean, you guys are, I'll call it a chemical manufacturer, or you have the IP around that. Are these products you're going to build yourself, or are you partnering with somebody to, make the scrubs or to treat the scrubs, or how do you describe the business plan here?
So scrubs is really going to be more of a chemical sale for us, mm-hmm. because all these large distributors and people that own their own brands and have already got their infrastructure mm-hmm. in place, they don't need us to make what they've been making for years. So what they need from us is clearly a differentiator in the marketplace. And this is a significant differentiator in the marketplace to put them ahead of anybody else. Mm. I can tell you that CBI, which is Charismatic Brands, it's public knowledge, so this is all for the world to see, gave us nearly $1 million to have a first dibs exclusive rights for the use of the technology. Now that we've got the rights, they are now going to go into marketing with this clinical trial, clinically proven technology. And they've seen enough signs for enough years that they were willing to put, and they put this money in years ago and still were very patient to work with us. I will tell you what's rather interesting is purely on the science, on the testing that was done, they actually started using chemical, and they've got product that qualifies for this clinically proven in their warehouse, and have been selling it to their customers even without this because that's how convinced they were just putting a better product in the marketplace. So kudos to them for really appreciating the science and putting a better product out in the marketplace. And now they're going to take it to another level, which is wonderful for them and clearly going to be wonderful for us.
And what's the addressable market for this type of product? How big is it?
You know, remember, as a purely chemical sale, I don't want to blow stupid numbers, but I would say, you know, it's in the multiples of tens of millions of dollars that we can do a year once this thing gains traction at really good margin. It's not $100 million business day one. It's probably going to be in the first year or two a $5-10 million business, and as this thing starts to really get out there, this is going to just generic growth. If one hospital chain of 700 hospitals has this, it's going to almost, you know, it's going to become political. How can they have it and nobody else have it? Sure. So I believe that there's going to be a lot of generic growth within that market. But where we're going to see from a numbers and a revenue standpoint, the biggest uptick is that we take this technology and we incorporate it into that apparel that we manufacture. We really are in 2024 going to show, and it's going to be the second part of 2024. And I'm going to also just remind you, because you guys are good at writing my words down and throwing them back at me.
I've got my pen right now. Yeah.
We've changed our financial year from the end of September to the end of December. So from 2024, our financial year is going to be the calendar year. So that's going to really just help everybody understand that when I talk about financial year, it's calendar year. So 2024 is going to see quite an impressive uptick, but it's going to be the second half of the year that we really see as the growth of what we've been working on for so long. And then into 2025, that trajectory should only continue at quite an impressive pace. So 2024 into 2025, I think that this company, in as little as 24 to 36 months, has every possibility of at least doubling.
Clearly an exciting product and a lot of progress so far. What other ideas are you working on? What other projects are you working on? What can you tell us?
We are working on new generations of products. So that's something that we always have to stay, you know, current. I think we are working on some new brands to actually give us new licenses so that we can spread our product offer into bigger fields. I think that when you go after brands and retailers and you are credible with the quality, that you deliver on time, that you support your product properly, and that you're a reliable supplier, it's actually a feather in our cap that they come back to us and say, what else can you do for us? And we do, I'd rather the staff, we take one program, deliver it properly on a trial basis and get the bigger business the year later. We really are, we want to prove that if we're going to go into any new product segment, that we know that the suppliers are credible. We don't want to embarrass what we've worked so hard. We've got a good name in the industry. We are reliable, and we got to make sure that our supply chain remains reliable.
I forgot to mention to everyone listening, if you've got a question you'd like me to ask Hylton, please use the chat function and we'll ask the question for you. You mentioned supply chain just now. Obviously, everything that's happened post-COVID, are things sort of a little bit, are they back to normal, or are you still seeing challenges?
Well, besides you guys in Vancouver, so if you're free, can you go down to the port and ship out and get the goods? So that's the kind of hiccup, Right. So it's not the supply chain. It's just all the pieces of the puzzle, and any hiccup in the chain obviously creates concern for us. Difficult to build in more than an extra month or two. I don't want to pay for inventory and have it lie here for 6 months. It's a problem. But no, what's actually happening is China's experiencing a bit of a challenge. People are really looking elsewhere besides China for supply. I think they're fooling themselves. We've been doing this for too long. We've got very established relationship with these factories. We know the quality that they deliver and the fact that they are reliable suppliers. And we're going to, we really do partner with these people. And I think that as our volumes are growing, we're certainly mustering in and asking for better pricing and, and doing whatever we can to be as efficient as possible. But we really aren't at this point in time. I have to be very honest. I tell you what, I couldn't get any of my staff to even go there. And we used to go there 4-6 times a year. They're that concerned about going to Asia and specifically to China. We are traveling this year back to Taiwan because there's new developments of new programs that they want developed. We will go to Japan as well. And so we do have a lot of things in the pipeline from new product segments and just new generation of the technologies that we brought out.
So, apart from the hiccups and such for your supply chain, any other challenges you're facing for the business?
No, because I would say, let's look at the numbers of where we are today and where we want to go to double the company in the next short order. We've got the resources from a cash point of view. If we take the cash we've got in hand, if we take our line of credit, if we take all the assets of the company, and we really are very well leveraged to actually, without this, we're not looking for a raise, we're not looking for, we don't need any of that. And we can still, with what we've got internally, without putting undue pressure on the company, we could literally double this business. And I think that's just how we've really come through COVID with all the headaches and hiccups. We've tightened the belt when we have to. We are very margin sensitive. I think that the only other thing when one talks about margin and chain supply, the last 18 months to 2 years, freight out of Asia was unconscionably, the price of a container went from 5,000 to 25,000, which really was more than a pill that we had to swallow in order to continue to supply. And it really did impact our margin. So what we're doing now is we are working at much better margin purely because of freight. I saw a little comment, I don't know, I was trying to read about Costco squeezing supply. I don't know if I was meant to read it or not, but I'm prepared to.
Absolutely. I'll be asking these questions real soon.
Okay, yeah. So go ahead if you want to ask another
question. Why don't we
jump
into? I've got two of them here. So any comments on the hard surface coating technology and testing?
It's taking a little longer, to be honest, because we got to get it right, and often these technologies can take multiple generations of formulations, for lack of a better term, before you get the product right. We've never done and never had a customer in the hard surface arena. We do have a lot of interest, and we do have people that own sporting stadiums, malls, that continually come back to us, which clearly says that we've got to continue to develop the generation. It's something that we are continuing to test, but until we get it to the point that we know it's good enough to be put into commercial use, we're certainly not going to shoot ourselves with something other than a product that's going to do the job. So we are continuing to do research in that area, but keeping in mind that our business is growing, and I'm looking at doubling the business. Without those additional areas of business, that will just add to the pie when we are ready to supply the hard surface area.
Okay, now the Costco question. It says, Costco is known to squeeze their suppliers. Will IFA still make good money from this relationship?
Yes. So what we've done is we're now in what's going to be our second year of supplying them. We know what their margin expectation is, and it's fairly low. However, it does come with rather an onerous back end in that they've got an unquestionable return policy, and who pays for the return? It's the supplier. We've had a very successful first turn. Our margins, and this might surprise who even typed the question, some of the product that we sell to Costco is actually some of the better margin that we supply to. So it's a matter of supplying the right product and probably just having the right supply chain. We've been invited by Roots to not only take the product that we sold to Costco, but actually for next year to put it into their own stores. And they actually have stores in Asia, believe it or not. So it's not going to be the kind of volumes that Costco can go through. But the fact is that they've recognized that what we've done has performed so well for Costco. I'm pretty happy. Yes, you got to, cost a little extra in for those returns into your costing. And this way it doesn't hurt you on the back end. But I'm actually very happy with the margins we're able to achieve selling to them.
Fantastic. So earlier you talked about growth and spending money on growth. I want to get a good picture of like, where will you spend money? Like, is it you're going to increase your marketing? Are you going to increase R&D? Are you going to put money into distribution? Where is that money going to get spent to grow your business from here?
Distribution, we don't need to really put money into. It's going to be a challenge, I think, as we grow, because we got to do our initial US deliveries through a 3PL warehouse in Houston, Texas. We moved our business out of California because it just got so prohibitive to operate in the state of California. So we're now bringing everything in. It takes another week to 10 days bringing things to Houston, Texas, but Texas is far more business friendly. Their pricing is more competitive. And we've been operating since, I believe, the beginning of the year out of Texas. We had a few hiccups. Staff went down there and it's operating quite smoothly. So we have a very large 3PL and we'll be able to handle that. Where are the challenges? We've put money into new staff. We've got new people for design and product development and sourcing. So we've put money into that. And that's probably the biggest area is R&D of product. As I said, we've got relationship with factories, and they've got the capacity to increase volumes quite nicely. Where else are we putting money? Yeah, we're putting it into R&D. Our testing and our laboratory budget is, and it's in the numbers, is significant. I'm hoping over time we can mitigate some of it, but it is a costly business at the lower volumes. To be doing the level of testing that we do, and we put quite a bit of budget into that. It's not something that's going to go away soon, and it's a challenge. So as the business grows, it will eat up more development dollars and testing dollars. We have to test each die lot. We have to constantly be vigilant that what the manufacturing of our customers, because remember, it's all third party, that they are in fact dosing the product correctly for the customer so that the customer is getting the performance we say the product's getting. I can tell you that we've had suppliers who've tried to circumvent our technology and supply something similar because they get better margin or they get kickbacks from suppliers, and then they put our brand on it. We've had to work and police, and we do have staff on the ground in Taiwan. We have staff on the ground in Japan, and we've got staff in the ground in China who have to visit all these manufacturing facilities to ensure that what our customers are paying for, they're getting the right product. It's a headache and it's a challenge, but it's not big dollars, and so that's not really where big dollars. So we've hired new staff in our Toronto office right here. And it's really admin and product development people that is taken over the biggest part of our budget in terms of new hires.
Gotcha. As investors, watching what you guys are doing, where do you think the next sort of 6 months, where do we need to pay the most attention to? Say 6 to 12 months. What catalysts or what sort of things should we be watching out for here?
Well, I think that now that we've got this clinical trial, I would say close to more to 12 than 6, Paul, to be honest. I think you're going to start to see a margin improvement because our chemical sales are definitely going to kick in.
Right.
So I think that that's going to have a nice impact to the business. And then I think there are certain retail in the US business that we're looking at. Our revenue growth, from 12 to 24 months from now is, as I say, I'm looking within 36 months to double the business from 20 to close to 40.
Mm-hmm. So doubling the business, and it sounds like higher chemical sales with higher margins. So the margin profile should be improving while the numbers are improving.
Absolutely looking at getting the bottom line improved.
Yeah, fantastic. Listen, I mean, we covered a fair bit today. Is there anything we missed? Is there any other sort of thing you want to make sure that we?
I just think that keep in mind retail suffering right now, and we're growing. So I think the fact that we've got a balance of not only supplying retail, but supplying that medical community, which we've only done in a small way. And I think that the medical industry is going to become a bigger part of what we do. I think is going to make us really, really important. And I think that who knows, when we're $40-50 million, we're going to be real attractive to a Kimberly-Clark, a Medline. People are going to start looking at us when we grow to a certain level in terms of wanting to wrap their arms around what we've built and maybe take it to another level. So our goal right now is to build the business ourselves and to create the value that this business down the road is going to be a really impressive company from a delivery of revenue and bottom line.
Fantastic. I think that's a perfect place to end this little discussion. It's been great to catch up. So we've been speaking with Hylton Karon, CEO of iFabric. Symbol, again, is IFA on the TSX. Hylton, it's great to catch up, and we look forward to catching up with you soon.
My pleasure. Thanks everyone for your time.
Thank you.
Thanks, Paul.